Arise, the genius in you presents Failing Strategy in Forex, Doing the Reverse by Charles. Hi, I am Charles, your Forex trader and investment person. I'm here to talk about this strategy that is not from a new indicator, but a new application of an old indicator. I have to say, most strategies on YouTube and indicators on MT4 are good. What do I mean by that? They can be used to produce consistent profit month after month. The big issue is how, where, and what. Where can you use these indicators or plans? By the end of this video, you will know these three things: where you can use these indicators or plans, what indicator you can use, how you can use this particular indicator or plan to generate consistent win month after month. Right now, most traders do the reverse of what they are supposed to do, exchanging their statistical probability of success to that of failure on consistent or non-consistent basis, resulting in stunted growth or total loss. To demonstrate what I mean, let's go into chart. For example, the euro dollar on a 4-hour chart. Let's analyze it for a period of 6 months. Let's use 2018 as our case study. Right here now, we can see the chart. This is 2020. We are moving back immediately now to 2018. And we use from January 2018 to June 2018, which is 6 months. Within this time frame, we are only going to use the two things. One is what we have here is three things, but I will remove this Bollinger Band for now. And we have a very clean screen that is only showing our price action and as you can see, placing it, this is a 13 simple moving average on a 4-hour chart. The 13 moving average is chosen in such a way that is very, very bold. You can see it very, very well. And this is our price action. You can see it highlighted here, a line chart in the price action on your MT4 chart. And what are we just going to trade here? Whenever the line chart crosses visibly over the 13 MA, we enter our trade. That is basically what we will do here. We will not do the statistical analysis in this video, but in the next video, we will do the statistical analysis. But let's just count the number of wins against number of losses we are going to encounter or have within this space of 6 months period. And then the next time, we can look at the statistical probability of whether this is a good strategy or a bad one. Let's begin. This is January. We can see the first one here. As it touches the moving average, it didn't penetrate down, but it moved up. So this is a pure win. It touches again and moved up again. Another win, because if you are using what we call a trailing stop loss, you can see that this one stopped here and did what is called double top. That gives you, because this is a 4-hour time frame, and if you are coming to shake it every 4 hours, you will clearly see this double top, and that will be your exit. It passed below this same moving average again, which is another win, and continued and continued. And we can see This is also a win. This can be called a loss because it moved over but returned back. It moved over but returned back. And assuming this strategy, if we enter a trade above, our stop loss is directly below, immediately below the moving average. Just maybe give it 10 pips below the moving average. That will be your stop loss. 10 pip max below the moving average. That will be your stop loss. So that if it's not going to where you have put it to go, it will only take you out. You don't have any problem. It moved down, and you can see here there is a little bit of losses. Here is win, here is win, here is win. Here is loss. Here is loss, here is win. Here is win. It's little big. This one is loss. And here is win. Here is win. Here, win. Another win. 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 Loss. You can see very small. Very small. Loss. As you can see here, loss. Win. Loss. This is loss. This is win. It didn't come out, so you cannot add this trade. And this is win. And by here, we have already gotten to match. You can see from here to here is match. So let's move on. Let's move on very, very fast. So we have again our win. This is loss. Win, win, win. This is loss. Win. This is almost win because it's big enough. It's 4 hours, remember. It's 4 hours. So this is win. This is win. Win. This can be said is loss. But it's a small loss because you have an ample time. It's a 4-hour time frame to remove it before it will hit your stop loss. This one is loss. This one is win. Win. Here is loss. Here is win. Here is win. Here is win. 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 This is win because it took time before it bounced back, and it's a 4-hour time frame. And in 4 hours, it demands that you check it every 4 hours. That is what it means to trade in 4-hour time frame. You check it every 4 hours. So by the time you come in the second 4 hours, before it will go back to take away your stop loss, which will be around this point, you must have taken it out on a win. This is win. This is win. This is win. This is win. Let's see. Because if you entered here, your stop loss will be about here. I don't know whether it touches, but if it touches, it may be loss. But it took time, so it may be win. When it's coming down, you will close it because it's 4 hours. This is a win. This is a win. This is loss. This is loss. This is win. So this is by May. So this is 4 months. So 4 months. We have our June here, May, June. So you can see the win, loss, win, win, loss, win, 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 win. This didn't come out very well, so it's not a trade. Win. This is loss. No, it didn't come out. Like I said, 10 pip below. 10 pip below. So here will be a stop loss. So it's again win, 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 win. Now, we have just analyzed from January to thereabout, let me say June, because July is still remaining. There are some July here, which is the 7th month, not the 6th month. But some people would have gotten more losses than win in this particular year. And you can do that in another year, 2019, 2015, 2016, and you will see more wins than losses in a very, very simple and clear strategy. You can see the screen. There is not much here. There is not anything new here. Then later in the next video, I will show you how even you can minimize those losses, because here now we're just concentrating on just crossing over the 13 simple moving average. There are other things that you will add to this simple 13 moving average, such as what we have before we started using it, which is Bollinger, which will also show us when there is a trend or when there is not a trend. And obviously, in all trading, you must trade trend and avoid squeeze. And only Bollinger can clearly show you where there is squeeze and where there is what? Trend. That will enable you to even remove some of these losses that we see. In the next video, we will add the Bollinger, then reanalyze the same thing. Then after that, we will now do the statistical analysis by checking this pips by pips and then calculating it within the space of these 6 months, dividing it by the 6 months to get our monthly average. Then we will see that it's very, 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 very simple using this simple strategy to have a consistent, very, very consistent win month after month on trading Forex. A very simple thing. A lot of things will be also said in our upcoming video. So thank you for watching. Remember, whenever you are thinking about trading, it rewards you for your consistency in the fact that your method has a higher probability of success than failure in the long run. So think long term, trade long term, and win in the long run. Thank you very much. If you have any suggestion or questions, please drop it on the comment below. I will try as much as possible to include the answer in the next video. And please don't fail to subscribe and share.